In today's market update, I'm going to be discussing one of my favorite subjects when it comes to financial markets, which is to do with news events or news announcements and price movements of financial markets and how the two are related. Before we do that, I must remind you to please make sure that you have read and understood these disclaimers. So let's speak about news events, or in this particular case, we're discussing a news announcement, which was the Fed announcement that occurred last Wednesday on the 31st of January. And we're going to start by taking a look at some news articles that were published at the end of the day, or at least this is the state of the article as such at the end of the day, because as you can see, these articles, or this particular article, included live updates, which of course concluded at the end of the day. The important point that I want to make about these news articles is the relationship that they imply between the news announcement itself and the price movement. And that particular relationship is a cause and effect relationship. In other words, the Fed meeting decided that rate cuts were not imminent, and that was the information that was released in the conference that occurred at 2:30 p.m. New York time. And so that announcement that the rate cuts are not imminent is the cause, if you like, of the fact that stocks ended lower. And so if we were to pick this apart and be quite detailed about what we're looking at here, the fact is that the stock markets, the US stock markets, ended the day lower. And as you can see in this headline, they state that fact, the fact that stocks ended lower, and then they provide a reason, which is, of course, the announcement made as a result of the Fed meeting. And that implies a direct cause and effect relationship. This is the Wall Street Journal, but we'll take a look at another article or two. Effectively, all financial journalists were reporting the same thing. Here you can see the simple headline repeated, that stocks finished sharply lower after. There is the relationship between the two. The Federal Reserve left interest rates unchanged and signaled cuts are coming but not imminent. That's a rather complicated statement. The important thing that we need to observe is that financial journalism involves reporting what has happened in terms of the facts and then providing us with a reason. And I'm not criticizing financial journalists because that is what they do. That is their job, after all, to help us to understand the world that we're living in. And so when stocks move, whether they move down or whether they move up, financial journalists are there to provide us with a reason. And that tends to happen with every news announcement or every news event. Here is another article. This is Reuters, as you can see, and they have the same headline, effectively, that Wall Street ends lower after Fed holds rates steady. So again, we have an implied cause and effect relationship. The cause is that the Fed is holding rates steady, and the effect is that Wall Street ends lower. Here we have a picture of some rather worried-looking traders. Although as a matter of interest, this photograph was taken 2 days before the news event that is being discussed. And here in a third article from MarketWatch, we have exactly the same headline and the implied relationship between the news event and the price movement. Now, this implied cause and effect relationship is pervasive. It is throughout all financial media. And it is what we are led to expect. We have been practically taught that this is how financial markets work. However, I would suggest that that is not true. Financial journalists are doing their job by helping us to understand what has happened by providing a reason. But I do think it's very important to question that reason and to question the relationship between news events and price movements. As a cycle analyst, I tend to look at things a little bit differently. So let's discuss how I see these news events affecting price action by taking a look at a chart. Here is the S&P 500, it's SPX data, and this is the analysis that we've been looking at for the S&P 500 for some time now. We have the 80-day cycle trough over here at the beginning of January. I've discussed this 20-day cycle trough over here on the 17th of January. And in last week's market update, I was looking ahead towards a 40-day cycle trough. This is the nest of lows. A nest of lows, of course, is created by this stack of circles and whiskers. Each one of these circles and whiskers relates to a particular cycle, and the circle represents the exact date or time that we would expect the next trough of that cycle to occur. The whiskers are the lines that extend to each side of those circles, representing the reasonable range of time in which that trough could occur. The result of these stacks of circles and whiskers is what Hurst called a nest of lows, and so it provides us with a high probability time that a particular cycle trough will occur. And in last week's market update, we were looking ahead to the 40-day cycle trough. Of course, we have the 80-day cycle trough. There is the nest of lows for the 80-day cycle trough, now expected in early March. Now let's turn our attention to this purple line. This is the 20-day cycle FLD. You probably know that the FLD is my favorite of the tools that Hurst developed, because the FLD is a very powerful line, and I use it in my trading because it provides us with very useful information because of the way in which price interacts with this line. FLD is, of course, an acronym for the future line of demarcation. And the word demarcation tells us what it does. It demarcates price action. And it is, of course, plotted into the future, as you can see on this chart. This is the partial bar for overnight trading today on Monday the 5th of February, and the FLD, as you can see, has been plotted into the future. It is a very useful line because of these interactions. Here you can see how price found support at the level of the 20-day FLD at the time that the 20-day cycle trough formed. That is what we expect in a balanced market on the occasion of the first 20-day cycle trough, following a trough of at least 80-day magnitude, which of course that was. When price comes down to form the 40-day cycle trough, which was this trough that we were expecting over here, usually what would happen is that price would cross down below the 20-day cycle FLD and project a target to the downside. But as I mentioned in last week's market update video, when a market is bullish, it is quite possible that far from crossing below the 20-day cycle FLD, price will actually again find support at the level of that 20-day cycle FLD. And that is, in my opinion, exactly what happened. You can see that at the end of trading on Wednesday, price was over here, just below the level of that FLD. On Thursday, it reversed direction and headed straight up again. In my opinion, that is probably the 40-day cycle trough that has formed. Here you can see the nest of lows, and if we join these circles, we can get an idea of exactly when that trough was expected. It was pretty much expected from the 31st. You can see there's that circle for the 5-day cycle, and of course the 40-day cycle circle still lies ahead of us because of the fact that the average wavelength of the 40-day cycle is 34 days, and if we measure the number of days from that 80-day cycle trough, 34 days would position that trough over here on the 8th of February, so in other words this Thursday. And this circle has been placed over here on tomorrow's bar because of the recent average wavelength of the 40-day cycle, which you can see at the right-hand edge of the chart has been calculated as 32.2 days. Is it possible that price will still come down and cross below the 20-day cycle FLD and form this trough? It is possible, but in my opinion, it is very likely that this 40-day cycle trough has indeed formed. One of the reasons that I think it is very likely is because, as discussed in recent market update videos, the cycles have been running short. Here we had a very short 12-day cycle instead of the average 17 days that we expect from a 20-day cycle. And if you don't understand why a 20-day cycle has an average wavelength of 17 days, I would encourage you to download the 10 Core Concepts document that there is a link to below this video. And so with the 20-day cycle running at only 12 days, it makes sense that the 40-day cycle will also be running short, and with that cycle coming in at 26 days, as I think you can just about see there, that makes it a very likely position for the 40-day cycle trough. But now, what does this have to do with the news event? And this is the interesting thing. The articles that we looked at were proposing that because of the Fed rates announcement, price in the stock markets had dropped. And you can see here is the red bar indicating that indeed those prices did drop. The next morning, however, as you can see, they immediately turned back up again. So what does this have to do with cycle analysis? In my experience, when a news event occurs, prices react with increased volatility. In other words, they move more than they have in recent bars. So you can see that quite clearly here. In fact, we have some fairly muted price action bars throughout this week over here. On Monday, we had a fairly good upward moving day. Tuesday, of course, the markets quietened down, probably as they prepared for the fact that this news announcement was coming soon. When the news announcement occurred, price moved strongly, and we're going to take a look at a shorter time frame chart in a moment to demonstrate that. The important thing that I've observed time and time again is that when news events occur, markets tend to move to an important FLD. And that is, in my opinion, what occurred on Wednesday. Price moved down to this 20-day FLD. Price needed to form a 40-day cycle trough. And in a bullish market, as I've mentioned in previous market update videos, it is quite possible that that 40-day cycle trough will form at the level of the 20-day cycle FLD. All that the news event served to do was it provided the opportunity for price to be moved down to the level of the FLD. Having found the FLD, that FLD then provided support and the market bounced straight back up again. I should point out I'm not the first or only person to do this. I must pay tribute to Robert Prechter of Elliott Wave International, who has written several books about this exact subject, and he was possibly one of the first people to raise the idea that in fact there is not a direct cause and effect relationship between news events and price movements. But now let's look at a shorter time frame chart. And this is a chart on the MT4 platform, and I have taken it back in time, and here you can see the trough that was found at the end of the day on the 31st of January. Let's just quickly look at the timings here. This bar over here is the 2 p.m. Fed announcement. And then 2 bars later, this is a 15-minute chart at 2:30 p.m. in New York. This is when the conference started. I would like to point out a few things about this. First of all, notice this strong upward moving bar. That occurred at the time that the Fed conference started. Now, here's a question for you. Do you think that within those first 15 minutes, the price action that you see in this bar was directly influenced by what was said or what happened in those first 15 minutes? Of course, it's possible, but when you watch news events as obsessively as I do, you will notice that this kind of thing happens all the time. And in the very next 15-minute bar, the entire move up was reversed and price ended up right down here at pretty much the level at which it had started. It then continued lower, as you can see, into effectively the market close, which was at about this time over here, which is why all those financial journalists were reporting that, of course, the stocks had tumbled. Although tumbled is a strange choice of word, but I would like to point something else out to you, which you can see at the beginning of this chart. What was the general direction of the market leading into this news announcement? as I think you can see the general direction of this price movement was in a downward direction. When the news announcement occurred, or the start of the conference, all that happened was that some traders ran price up, just in case people had set stop orders. So they ran price up, a few people got stopped into long trades, and then of course price reversed and it continued on its way down. So my question to you is, did the actual Fed announcement really move this price? After the markets had closed and the traders wrapped up for the day, it started turning around and moved steadily upwards. When the US markets opened the next day, which was on about this bar over here, as you can see, it concertedly moved upwards. And the news announcement of the previous day was pretty much old news and forgotten about in terms of the price movement of this stock index. So in conclusion, I would encourage you to question the cause and effect relationship between news announcements or news events and the price movements. I would also encourage you to take a look at the FLDs on your charts, because they provide very likely places that price will be moved to. Just before I sign off on this video, I should point out that actually the indicator that we have on this chart is our new sentient FLD indicator. You will notice several targets over here that have been achieved and have been marked on the chart, as well as the cycle analysis and of course some useful information at the top left. We will be launching these indicators for the MT4 platform later this week, I think I'm correct in saying, and so stay tuned for that. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.